So, welcome to the second part of this panel discussion with Swapper and Wandoo Finance as a loan originator, here from the office in Madrid, from the loan office in Madrid. We already introduced ourselves in the first part, so if you did not see that, we will put the link in the description. And to warm up, not only the heating in the room, because in Madrid it's quite cold currently in January. Also to warm up, like the talking in the interview, it's not so easy, and it's of course for all of us, not for you because you are used to that, but at least for me it is always a bit exhausting and also difficult to make it in English because I'm not so familiar with this language, especially when the camera is turned on, yeah, that is even worse, yeah. Yeah, this trip was a challenge for us, and I thought we can also mention some real-life happenings, because now you are much more smiling than in the first part, and I think we have to explain that.
Yes.
It happened when you went here by plane, by the flight, that your baggage was lost in London,
yes.
Yeah? And it was quite a challenge to organize this. Yeah?
Yes. We had few struggles when organizing this trip. First of all, Indrek couldn't came. He's here from Estonia, and then I was flying yesterday, and I should fly through Germany because we don't have direct flight. It got cancelled due to the bad weather in Germany. Then we switched it to Netherlands, and then it was cancelled. And then I was flying in the end through London. And when I came here, they lost my bag. So yesterday I went shopping in Spain.
But
I have at least some clothes. Yeah, but you know, it's not mine.
It's always right, yeah. And so a lot of happenings, but now you're smiling again because the luggage is found and will be delivered to the hotel, so you will have your favorite dresses again, as you told me, which is also good news. And it was some challenges. Not only that we postponed it since 2020 because of COVID, it was also a challenge right now to organize it, but we are dedicated, we are focused, and this is what we will do right now as well in the interview. Also for me it was yesterday happening because I had the second worst lunch in my life ever with a moldy tomato, but this is a topic of another channel. It's the road trip. You will find it also in the video. I recorded even the moldy tomato at the restaurant. Yes, it's maybe not the best advertisement for them. Anyway, let's get back to the topic now in part 2, more Wandoo Finance related questions. So why I have to read it first is because we already covered this question. There are some questions we already covered in the first part, and so sorry, sometimes I have to read my question and then reconsider to skip it maybe, because we already, for example, covered the countries you are currently providing loans, but maybe we can just relate a little bit deeper into that, because you are offering on Swapper Poland and Spanish loans. You are also in Romania, but currently developing that, I think, because we have heard also from Indrek that in future there might be loans from Romania available, but I think it would be exciting now, as all this occurred in the first part, and also when we have been talking at the coffee, that you are quite successful with Wandoo Finance, finding institutional investors that have been asking I think it was in Dubai, you told me, and
there as well.
Maybe you can tell us a bit more about all these happenings and growth strategies.
Mm-hmm. Maybe a bit of the history about markets, because we used to offer on Swapper platform also loans from Russia, Denmark and Georgia, because those were the markets where we also were working at some point. And actually when I founded Wandoo Finance, Georgia was the first country, but it got closed in 2019 because they implemented huge changes in legislation and introduced a very strict interest cap, which didn't cover risk profile of our customers, because our interest rates are usually higher for the reason that we have more debtors than banks has. So for that reason, interest rate for the borrowers is higher. So they introduced the interest cap and we closed the market. Denmark and Russia, those markets we closed in 2020 when COVID started. That goes together with my story about how it went during the COVID, and it was quite tough time for us, and basically when pandemic started in March, I think it was April when we were actually closing already Russia and Denmark. We realized that both countries were not profitable yet. They were relatively new for us. So we decided that in order to survive, we need to cut everything that we can cut. We also had a cost cutting within the group, not only closing the markets. Yes, that was the reason why we closed them, and that gave us a chance to actually survive the turbulent times. To be honest, we were quite happy when in 2022, when war started in Ukraine, that we have no connection to Russia anymore, because it would make our life even more complicated. So those markets were closed in 2020, and the two main markets, Poland and Spain, are the almost first ones. Poland was established in 2016, Spain in the beginning of 2017, so both of them are well known. Both of them are profitable, both of them are growing, stable, and even though there were some legislation changes in Poland, first changes came into force last year, so it was in the end of 2022, I think it was 18th of December or something. They introduced the interest cap, they decreased it, and if we compare it in a situation like how it was before and how it is now, we used to have first loan for free for the borrowers in Poland, and in the second loan, when the customer returned to us, the interest rate was somewhere around 25% per month. So they introduced the interest cap, and it changed the pricing of our product in Poland a lot. Basically, the maximum interest rate that you can charge customer is somewhere around 12% per month at this moment, and those changes come into force in 2022, in the end of 2022. We don't have first loan for free anymore, so first loan costs 12% point something, and the second loan is the same price, 12% point something. And usually interest cap is something that we are very cautious about, because you never know if it's going to be enough to cover all the risks, because we do have more debtors than banks, for example. But actually the legislation changes in Poland were really good for us, because many competitors decided to leave the market. That was the first good news, because we split the companies who left in the market, we split the good customers of those companies between us. The second thing what happened, we see that during the last year the population of borrower have changed a lot, meaning that loan have become cheap enough, because average loan amount is 300 euros. So, for example, if you come and take 100, you have to pay after 1 month 112 euros, which is quite low. And we see that we are getting better and better customers, somewhere in the middle, like closer to the banking customers, because you can get a loan within a minute online. You don't have to do all the paperwork, and if they need a small amount of money, they come to us. They don't come to bank, because loan is cheap enough. So what we have experienced that after introducing the interest cap, our loan portfolio improved significantly. Our performance improved significantly. That's something you would not expect straight away. Usually, you have to adjust to changes and find a way to still have some profit margin, but in case of Poland it was really good news.
So I'm really sorry to interrupt, but I think it's important for me right now to understand it, because now I'm really confused. You have been talking about an interest rate cap in Poland is 12.5% per year?
Per month.
Per month. Okay, then I get it again. Because if we are talking about per year, you pay us 16%. Then for me it is like okay, now I'm out of it. Yeah, so okay,
it's per month.
So per month 12.5, which is still okay if you calculate it on the year. Yeah. Okay, then I'm with you again, and we can continue with the interview, and it makes sense to continue the records. Okay, good. But this was really important for me to understand, because otherwise I was like just focusing on this one issue and could not listen anymore. Okay, then sorry for interrupting you, and we can continue. Well, a lot of follow-up questions already occurred again, but let's stick to the question. Like we have been talking about the markets and.
Yes, And also, I will probably continue to the legislation changes in Poland, because that have made also changes that on platform.
So we jump to another question. I would have had later, but no problem. It's related. Yes.
It's related. I'll explain why.
Yeah.
So the second round of legislation changes in Poland. First one was in the end of 2022. The second round came into force January 1st this year. This time legislation limits lending companies and microfinance companies on the way how they can attract the funding, because on the Polish market they had few bad experiences when local companies, or maybe not so local, on the Polish market were lending companies who collected money using bonds, also in Poland. And then they just didn't pay back, and the Polish government decided to regulate how the microfinance companies can attract funding. And bonds on a local Polish market, for example, is forbidden starting from January 1st. And that the same goes also to funding from peer-to-peer platforms. So from 1st of January, we don't add consumer loans from Poland to Swapper platform anymore. So. This is also one thing that is connected or related to how we attract funding, and this is also related to what I told before, that we have several ways now. So we don't have only platform, and this is also a good point when the new legislation in Poland were introduced, we already had some alternatives. Additionally to that, of course, we removed the consumer loans from Poland from the platform, and this is that was the moment when we introduced the business loans. And business loans are the ones who are like Wandoo Finance Latvia holding company is the one who's obligated to pay to Swapper. So it's not direct. Loans are not directly to Spain or Poland or Romania or whatever, but business loan goes to Latvian entity, which is a holding company who owns the group. So that was a change that we had recently, basically in the end of December. All the investors got the information. Swapper changed the agreements, we changed them on our side as well. So that's and that's related to investing part or attracting funding on our side, because we have few options at the moment and we will have even more. And if we talk about the bond market or bonds, issuing bonds, which is quite common thing within our field or our type of companies. That's also something that we are planning to do, and we already have started discussions with a few potential intermediaries through who we could issue bonds, and we're planning to do so in the beginning of 2025, so more or less within a year, maybe a bit more, and that's going to be one more addition to the funding part, or attracting funding for us and source for us. So.
Okay, so of course a lot of more questions occurred already in my head, and this is also the problem when I do these records and interviews. So also maybe that the people the viewers are not wondering about it, because sometimes I try to think already about the follow-up questions to the panel, and then maybe not get all the details you are mentioning right now. So I will also watch my own videos later again to get all the information. But related question to understand the whole process, which is for me the important thing as a private investor, to learn about the investments also. The change was right now that you can only, from the legal perspective in Poland, which also made a lot of worries, to be honest, in the investors community already. Maybe you did not get all the messages, but also between us we had a lot of messages going on about this change in Poland, and worries also that might affect Swapper and Wandoo Finance. Then I wrote you, and then you said, "Calm down, we are aware of everything, no problem." Yeah, and then this made me a bit more relaxed again. But however, we have now the opportunity to talk about this in detail, because I think, at least for me, it is important to understand that. So the legal change was that it's not allowed anymore in Poland to finance consumer loans by this kind of crowdfunding by P2P. So this was the point, to summarize it in easy sentences, easy to understand sentences. So then we also relate, I think, now to indirect explanation in the first part. Maybe I'm wrong. You will explain me the reason why Swapper has this new company founded with the license. I think this is related to that. But so what I understood right now, during I tried to think about the next question and everything in this interview, is that you already have been aware of this like long time ago. You prepared everything in the background to be able to continue in the Polish market to the current conditions for the borrowers. And then you found a solution to still continue offering investments in the Polish loans, but of course with another construction and another kind of loans and kind of investment for the private investors, by having business loans which the company takes from an Latvian entity, which takes it from another company of Swapper, the one that has the license. Okay. But I think I'm somewhere wrong in the process, but this is how my simple brain tries to understand it right now.
Yes, so what we do not offer consumer loans from Poland starting from 1st of January, that's done.
For the investors on the platform.
Yes, for investors on the platform.
For the borrowers, you still offer it.
Yes, of course.
No change for the borrowers.
No change for the borrowers. We have successful business in Poland. It's profitable and it's improving, and we are growing there. So no point to stop any operations. And from borrowers' perspective, no, nothing have changed. What have changed from a Swapper platform? We do send to Swapper platform consumer loans from Spain. And Edwards will be able to tell you how it actually the process works and show you everything. So we do send to Swapper platform consumer loans from Spain, from Poland not anymore. From Romania we don't send any, haven't sent any loans haven't offered any loans on the Swapper platform so far. And what's new, we have business loans, and yes, that's connected also to the new entity that Swapper has, because in some way it's a loan. It has become a loan originator, because Swapper Finance is the new subsidiary of Swapper platform, the one that is licensed, that Indrek mentioned already. They transferred some money to us as a business loan, and to us I mean to Latvian entity, to holding company. So it doesn't go directly to the countries, no, it goes to the holding company, to Latvia. So now the company who is obligated to pay back to the investors is a Latvian holding company that we had since the beginning. So that's the change. We offer business loans, and also you are completely right, because we had a lot of time. We knew about this change. I think it was introduced in the middle of the year of 2022, so it's more or less a year and a half. That was the time that we had also to think about additional sources of funding specifically for Poland, to be ready for this regulation and not to violate anything. And of course, not only Indrek requested legal opinions and how it goes, and not only he registered the subsidiary of Swapper, but also we on our side, we are regulated in terms of there is regulation in Poland, and the regulator is the Financial Commission of Poland, KNF. In Romania, our regulator is Central Bank of Romania, so we cannot, even within the group, we cannot do anything that does not comply the law, because even Romanian regulator can check the whole group and see if we still are trustworthy lenders. So for us, it's very important on every step of the way. We are getting legal assistance from very good lawyers in every country. So, and also in this case, we had enough time to prepare and to be compliant to the law. And same goes also course, Indrek at some point we wanted to change the product, and Indrek at some point told, okay guys, show me the legal framework, show me the whole idea. So, and we had a year and a half for that. It was more than enough time to be ready. And yes, it was probably stressful from investors' perspective, because we did send out the information quite late. Yes, that's true, but there were like few things that were going on, and we did it when we were ready. Some discussions started a bit earlier, and yes, in terms like from that perspective, it seemed a bit late, but we did manage to do everything until 1st of January, so as we should. So probably confusing from the investor's perspective, meaning that it was late because some of the companies already announced some information and so on. We wasn't ready. We did it when we were ready, and all the agreements and everything was ready from our side, from Swapper side. But yeah.
Yeah, but now we are sitting here all together, so we can try to clarify a lot and get transparency into that, which is very important for me, but I guess also for other investors. And so I'm still mentioning again that I'm looking forward to exchanging the comments, because questions might occur, and maybe also it's important to mention, that it's sometimes easy to have questions as a viewer at home in the living room, but when you are sitting here, me also a bit nervous, to be honest, in the situation, everything that you get all the questions is sometimes not that easy, but a lot of questions already occurred again, just for me to understand it, and so I will try to remember all that came in my mind during you explained it right now. First of all, to understand it, so on Swapper platform, we no more invest in Polish loans, we invest in a Latvian business loan.
Yes.
Is this correct?
Yes, correct.
So if I open now the Swapper platform, does it show that I invest in a Polish loan, or does it show that I invest in a...
In the business loans, no. Polish loans, no.
So anymore. I'm not investing in the Polish market anymore, is this correct?
No, you don't invest, no. You invest in a Latvian holding company as a business loan, and no Polish loans anymore.
I have to check this, because if...
You do have Spanish though.
Let me check. You know,
you can see on the platform, you can see like SF Finance, which is the legal name of the Swapper daughter company. You can see loans for like SF
I have to, this is very important maybe for some investors, because I can see right now in my auto invest, I have to activate it as SV Finance. It's not activated in my auto invest whatever, so probably it did not automatically.
It did. It did.
No, it did not, because it's not. I don't see that. Then why is it not activated in my auto invest? I don't understand it. Maybe.
Well, Indrek, correct me if I'm wrong, but when investor accepted the new agreement on the platform, it did activate the business loans, right?
Yeah, it might be that reason that are you using the easy invest or the custom investing, auto invest?
I have the custom investing since like many years. I think. What was the name of the first CEO? What was the name of the guy I had to interview? Petris, Petris actually activated with me together this auto investment since this time.
You have it since then?
Yeah, exactly. Yeah, and now maybe sometimes I adapted a bit, but I think anyway, now on the custom investing, SV Finance was not activated, which is maybe important to mention, because maybe some others have the same problem. I just saw it right now as we have been talking about it, and that, to be honest, maybe it's strange for you to hear that, but I'm just a simple private investor, and from my perspective, I did not know that I have to activate it, and also I was not sure what SV Finance is at this moment, to be honest. Yeah, just to be honest to you. Yeah, maybe I should have known it by the blog entry.
Bernhard, do you get the emails, like informal and the monthly emails from Swapper? Maybe because we write these things in the emails. But do you receive them? Maybe you don't.
No, I'm not. Oh, yes, I do monthly. Yes, with the blog. Yeah, but maybe I do not read all of them. That's maybe a problem.
Okay.
I just discuss honest problem. That the point is you cannot read every newsletter. That's just a fact. Yeah, I'm also very interested in it, but
so there's a slight chance that might be a problem.
Yes, of course. Yeah. But I think it would be good to just clarify somehow in a pop-up window or something, I don't know, that we have to activate SV Finance, and that SV Finance is this loan originator, which is Wandoo Finance in reality. So this, wait, I'm sorry, I have to check everything on my, now I have the opportunity, now I have the opportunity to talk to all people that are responsible for that, yeah, in one panel, yeah, so I have to use this opportunity. So now I activated SV Finance, SW Finance. So then I have to see, can I check the countries? No. There is no option for countries in the...
It goes to Latvia. If we talk about business loans, it goes to Latvia. And you probably have a loan type, so you have consumer loans and you have business loans, right?
Yeah, short-term leasing and business loans are 3 options at the moment.
Let me check. I have interest rate, okay, this is clear. Then I have the maximum investment per loan, I made 500, which is okay, I think. Is it correct? Indrek, 500. Maximum investment per loan, I chose 500.
Yes, that's completely fine.
Makes sense, huh? Long term, I have like everything from 0 to 48. Funds, all funds, portfolio term until deactivated. Loan status, all loan statuses. Why? Because it's buyback in any way, so I can take all. Loan originators, I have Wandoo Finance, which was already activated, but now I also activated during our interview right now, during our discussion, the SW Finance. And buyback, yes. And then verify criteria, it finds 42,000 loans, safe, and it's fine. Huh?
Yeah, now it's doing
good.
Investing for you. Easy life.
Very good, because I have a cash track today of 1,800 compared to the account value of more than 40,000, which was okay, but I think a reason might also be because the SW Finance was not activated. So I missed the new loans. Okay, good. This was very important for me right now. Yeah.
It's probably worth mentioning that SV Finance, the subsidiary of Swapper, is also that something that we will be using to introduce consumer loans from Romania through the Swapper Finance, because from the legal perspective, from our side, it's much more, it's more compliant rather to do that from Romania straight away to the platform. So that subsidiary will be also used from from our perspective when adding loans from Romania, but we haven't so far. As soon as we will do that, we will send out the information for sure, but this entity is also something that is very useful for us in the future, and I think Indrek also has some plans for it. Okay. Not only now. Indrek, correct me if I'm wrong.
Yes, there are plans. Cannot say them all now.
Okay. For me, it's already difficult to follow in any way. So okay. But now, next question. I'm now on the Swapper website with the loan originators, so /loan originators, English version. Country, Spain, Poland is not correct. There should be written Spain, yes. Latvia. Just to clarify, yes. I know it takes some time to update everything, yes, but I want to mention it in this record that this is not correct anymore.
That goes for both sides. Also Wandoo Finance and also Swapper, we were quite busy during December implementing all the changes, and it took a lot of IT resources, finance, legal resources, everything. So not only that is not updated yet, but also statistics page the statistics we usually upload and send to Swapper website from our side will be updated according to the new products and everything, but it haven't been so far. So it's something that we
added some. Yeah, sorry. Yeah.
Mm-hmm.
Sorry.
Yeah, go on.
Yeah, I wanted to. We did some new like the loan statuses on the stats page, but we got feedback from our community or like our customers that they would like to see something more there. So we're updating and putting more stuff there. That maybe gives also more information how Swapper performing and how the loans or claims are performing. So it's a work in progress. At the moment.
So the question is, yes, you are right, it's not updated fully yet.
So it's not correct. So
no.
Yeah. So Indrek, you will change it soon to country Spain.
I'm making notes actually at the moment to make.
Yeah. Because it was important for me to understand it. Yeah. So we are no more investing in Poland, in from the legal perspective.
I will make a note as well.
So the buyback, and this is the next important point for me, because the buyback is a very nice wording, but the buyback is only as good as the company that offers the buyback. We learned this lesson already in other platforms and other loan originators especially in the last years. So the buyback guarantee for the loans from, maybe it's the wrong wording now, but for the loans from Poland, which are in reality from Latvia right now, the buyback guarantee comes from which entity?
We buying back, so basically
we are who?
Wandoo Finance. And also not only consumer loans has the buyback, but also business loans, all of them. Basically, it's general terms of loans that we as a Wandoo Finance offer on the platform, they haven't changed. So same interest rate, 14% goes for all loans that we offer, plus 2% if you are a member of Loyalty, and you are. So it's 16% interest rate if you are. And also buyback is something that we have always offered, and it always have been there, and same goes also for the current situation. So it's there.
So in case of an insolvency of the Latvian entity of Wandoo Finance, I mean this SW Finance is the name right now, can we be sure that still the buyback will be covered by the group of Wandoo Finance? And this question goes to you, Iveta, but then also to Indrek, if you check this from the side of this platform, that we can be sure that this buyback will be...
So we have small privilege. I mean, when Indrek got the company where he is CEO now, Swapper platform, we were a bit privileged from Wandoo Finance side, because we have always been the main loan originator, and there were very tough times, and our financial results were not in a place which you could say nice or good, and during those times we had this privilege to continue cooperate with Swapper, and as I said, we were like on a daily basis talking and solving the things and so on. So we are a bit privileged comparing to other loan originators, because now Indrek has some issues adding new ones because of the financial results. So since we have the history, we have like a little privilege in terms of that, at least historically. If we talk about the moment right now, then from the legal perspective, from investor perspective, if let's say Spain or Poland specifically had the obligation to pay to the investor, and the specific country or entity was responsible, then in case of business loans it's a group. And if something goes wrong, let's say in Poland, we still are the group, and we are at this moment expanding. So from that point of view, it's better. But from the other hand, we've been through a lot, and even when the obligation was lied on a specific country, we didn't fail any promises. Of course, you never know what can happen, but from legal perspective, it is better to have this liability or obligation on the group, because if something goes wrong with one country or another, hopefully we'll have much more countries very soon, and we're working on that. So yeah, that's how it is.
Yeah, but I always try to be positive also in these interviews, which is important, because if you're just mean, I think it makes no sense to discuss, because then it will be ended in any way. But on the other hand, I also still want to be critical for myself as an investor, and also for the audience when we discuss it in the comments later. So Indrek, once more the question now to you, please. Is it in the contracts that we can assure that the buyback is paid by the Wandoo Finance Group in case something goes wrong with the entity of SW Finance?
Correct, because the loan is given to the group anyway, and like the SW Finance is a total company of Swapper. So yes, we have these things in agreement, like there are around 50 or 40 pages in the cooperation agreement that we have, and this buyback the obligation to pay the debts is there, written there, of course.
Okay, good to hear.
Yeah, and also like giving a more like maybe meat to this piece is that, as we was told, that we're just changing the way we're making a business, but the kind of the people behind the companies, kind of behind there, and the business, what like the initial is like giving out consumer loans from the whichever Spain or Poland market, is still the same. It's just like kind of the way of using the Swapper platform is different. If I kind of understand what I mean like the people behind that is the same. So I don't see a risk from that perspective that now suddenly people would like to do something else than they have done for the past, I don't know, 5, 6, 8 years.
Yeah, I think, you know, I still have to mention again, it's sometimes difficult for me to follow all the information I get right now, yeah. But so from how I understand it, the difference for me was right now, from my understanding, that I invest not anymore in the Polish entity of Wandoo Finance, I now invest in the Latvian. Yeah? Yes, so originally I understood that if they take the loan from the entity of Swapper, at the end, like the legal connection for me as an investor is to the entity in Latvia, yes, first of all. Yeah? So at the end, they have to cover the buyback. Yes. Mm-hmm. And then it was for me the follow-up question, what if this entity goes wrong? Mm-hmm. Is the holding still so responsible for the buyback? I hope I could express it right now correct in English what I mean.
Yeah, yes it is, yeah.
Yeah, it is. Okay, good. So I think now, as we changed my structure of the interview, because we moved from the topic of markets you want to dive into in future or expand in future, we already went into this Poland topic, so I can skip this question here later. Future, but I have to check my question. I think about the future, we did not cover this so much because we like moved into the Poland topic immediately, and I would be curious, maybe you want to share it, I'm not sure if you can and if you want, but about your, you know, it's also like life happenings, yeah, like your experience, how your job changed from the CEO to now your occupation you have now in the Wandoo Finance Group, not only being an owner, also what you are doing mainly for Wandoo Finance, and maybe also your Dubai experiences you made, because it sounds so exciting for me. Yeah,
it was exciting. Yeah. So okay, maybe about future plans and market, to continue the things that we started to discuss. So yeah, when we were left with only 2 markets after COVID, Poland and Spain, it's obviously not enough to grow, because we can grow in those markets until some limit. We haven't reached it and we can still grow, but anyway, Romania is our first country after recovering from COVID, our new market, and it's something that we've been developing. It's the market we have been developing for the last year. We haven't issued loans. We haven't started to issue like like significant volumes of loans in Romania yet. We are setting up everything, and soon should be ready. And then at some point it will be available on Swapper, but not yet. So yes, and if we talk about the future plans, that's probably something worth mentioning, because when we talk about the current group of the companies, holding company in Latvia, daughter companies or subsidiaries in Poland, Spain, Romania, our new markets and direction that we are looking for is Africa and Latin America. So we have just finished quite extensive research on many countries in both continents, and those are obviously much more high-risk markets for sure, and we do realize that, and the risks are higher politically, from like regulatory perspective, from how people are paying back loans, from the culture, mentality, and many things. So all those markets which we consider to be high-risk markets, they will not be added to the current holding. And this is something that we've been, Our financial results are finally good in 2023.
We'll come back to that later anyway.
Yeah, we will finish here with a profit. We did increase also our own capital in the end of the year. So if it was 2.4 million, I think, or don't remember specific, it was around 2.5 million. Before that, we added 2.3 million in the end of the year, so it's 4.5 around that number. We will close the year with improved our capital, like share capital. Okay, and we are like actively working to improve the results within this group of the companies, because we are having plans to issue bonds, and in order to do that, you have to have good results. And institutional investors, they have a lot of requirements. We're going through the due diligence process for quite a long time, and they have a lot of KPIs. So all the markets that we're planning to develop, and now basically we have chosen 4 countries in Africa and 2 countries in Latin America. We have made quite extensive research in terms of legal environment, market situation, competitors, availability of data for us to be able to have a proper scoring for the customers. So, and we have come to those 4 countries in Africa and 2 countries in Latin America, and that's something that we will be moving forward with. But that's going to be a separate structure or separate story. And yes, and we are attracting also investors for that part of business. Those deals are mostly equity deals, and this is what led us to Dubai. And the story I told you, we had some investors event in Dubai. I think it was end of October or beginning of November, just recently. And we went there for 2 days because the event was only for 2 days. We made a presentation of the company, showed our current results, showed our future plans and our plans to expansion in Africa, because the goal of this event was to find some strategic partners for those markets. And in the end, instead of staying there for 2 days, we stayed for almost 6 days. Because what happened after the presentation, we had a lot of invitations to have personal meetings with the local people from Emirates, not only from Dubai, also from Abu Dhabi. And we also got the invitation to the palace, which was kind of fun because, they have quite strict dress code there for women especially, and since we were coming to European event, I wasn't thinking about that too much. You just dress casually. Of course I had a jacket, but I wasn't thinking how long is the sleeve or like things like that. And before the meeting we were invited to the palace, and we stayed there almost 6 days, and they send you protocol, what you can wear, what you can in really specific details. And I was like, and I read it and I understand I have nothing to wear, because the requirements are that if you have a tattoo you have to cover it, and I do have them. So, and I usually don't hide them. Of course I can wear a jacket, but I don't think if I hide them or not. So how long the skirt could be, how much of the shoulders can be open, and how, very specific things. So it was kind of completely different experience, completely different culture and mentality, and religion wise of course as well. And that's something that we wasn't ready for, because we came for 2 days, European event. Of course it happened in Dubai, but still. And in the end we were thrown in the local culture, local things that we didn't understood. So before the meetings we were actually sitting and googling how you should talk to people, what you should do or not do. So it was kind of exciting thing. And yes, and we did succeeded with that direction as well, meaning that we have some potential discussions started after the event. We have created also a very detailed business plan and forecast for each of the markets we have chosen. And that's probably the biggest part I'm involved in, because I'm more I'm not so much in the operational stuff. I'm more now working on development of the company, and not only this holding, but also much more riskier markets and different continents and completely different culture and religion and so on. If we talk about this holding, like Latvian company, Poland, Spain, Romania, we also are planning to add some more European or close to European countries, much more regulated, not so risky as Africa and Latin America. We do the research right now because we finished Africa and Latin America story. Now we do the research, we're going through the European and close to European countries where we could also open a business and add to this specific holding, but definitely not Africa and not Latin America, because it's obviously much more high-risk countries. We are planning to be unprofitable there for years. It's obvious that you need much more higher investments there. You're not going to be so profitable so fast. It's like it takes much longer time because there's much more risk there, and we don't want to add those companies to the current structure, because here we're talking about bonds and specific requirements from institutional investors. You have to follow up the KPI, so we don't touch this story. We create it as a separate thing, yes.
Yeah, so talking about that, I also understand that your occupation in the company changed more towards this attracting investors, yes. And you have the management, the country managers, yes. You have the CEO at Wandoo Finance, then Swap is separated during the years. So it developed like more on the part of attracting investors and the bigger picture, yes. I understand.
Yes.
Yeah.
Yes.
And it's also interesting, all these side learnings we all do in the last years and during all these processes, and it's this is also a part that is also for me interesting, and a lot of learnings I could make in the industry on the P2P platforms and so on as a side effect for the personality and all that. Yeah, very interesting. But let's go back to the topic of Swapper and Wandoo Finance. And when we are talking about, you have been talking about profit already a bit. I want to come back to this in the next question. But first, one question. When you think about profit, it's also a lot about the quality of loans. This is something Swapper obviously will monitor, I guess, regularly.
Yes.
But it's also a question I want to address directly now to Edwards as well as you, Eveta. How is the default rate, the current one of the loans in each country, so in Poland and in Spain?
So maybe I can share the screen. I will try to do that. I'm not sure how it's going to work here. Moment. Yes.
Because you always told me that you have a very, very good rate, but recovery ratio, but maybe you can also explain this a bit more, that we learn more about the industry in that matter.
Just a second, need to do.
I think you're on the last page of the...
Yes, you are right. Okay, let me... you see it well.
Yeah, okay. Maybe we can also then put the screenshot later. I can edit it
into the video
because I guess nobody will see this in the camera because it's too small in the camera, the record right now. But I will edit it.
Okay, but I'll tell the main idea, and I will send you the slides so you don't have to do the screenshot. So if we talk about quality of portfolio, the first and the most important thing is to talk about expected credit loss. So that's the part of portfolio that you cannot get back. So that's the part of debtors which are not paying after internal debt collection, any other activities we are doing to collect the money. This is the part of the portfolio you could consider as lost. So expected credit loss here in both graphs is the bright green line, the bottom line, so the last one from the below. So the upper graph is Spanish result, and the below it's Poland, and the bright green line, see it? The one.
Which one do you mean? Sorry.
The one that is.
You mean this one?
Yes, this one. Yes, the one that in both graphs it goes.
But it's not described here, I think.
It is here.
Is this one? Yeah,
yes,
I didn't.
Yes.
Yeah,
so
okay.
it's the lowest line in both pictures. See, the one that is. So and this line shows the expected credit loss or percentage of portfolio we are not being able. Yes, theoretically, but there's an explanation to that as well. So if we look at the Spain, you now see that the line is somewhere in a level of 15%. So let me try to use the mouse. Oh, it disappears somewhere. Just a second. It's floating.
I think it's too slow, yeah.
Yeah, see? I mean, this level is somewhere around 15%. If we talk about Poland, it's somewhere around 5-6% of the whole portfolio that we cannot get back. So if you compare the countries, logically, Polish portfolio is better because expected credit loss is low. Mm-hmm. It's lower, it's somewhere around 5 or 6%. In Spain, it's higher, it's somewhere around 15%. That goes a bit together with the, of course, cultural and mentality thing. As I say, Spanish people have fiesta, and they sometimes forget more often to pay back their
payment culture. The more south you go, the payment culture gets a bit more relaxed in a way.
Yes, yes,
okay.
Relaxed. You can say so. So if we
but
take,
you will not get away with that. As an excuse, I guess.
Of course.
I hope so, as an investor.
If we take both markets, both our main markets in average, then average expected credit loss is somewhere around 9.5%. So it's less than 10%. And what happens with this part of portfolio? So to get there, we have first of all internal collection, and that's probably Eduards will tell a bit more when we have the tour, but we have internal collection. For the first 30-40 days, depending on the market, we try to collect money by ourselves. We are calling, sending SMSs. We have the right to put customer in credit bureaus, so we made their credit history back.
This is what they are doing.
This is what they are doing.
Yeah,
yes.
Right now. Yes.
Yes.
Then I hear them calling and talking and screaming and okay.
Screaming. No, probably.
No, I think it was something else. I think they have.
Well, the Spanish people are emotional and. After we do the internal collection, we also use external debt collection companies. So we give those loans, debtors, to external loan collection companies, and they try to do the debt collection then. So, and in the end, after the whole process, we get to these numbers. So in average for both countries, it's somewhere at 9.5% of expected credit loss or loans that we are not getting back. And what happens to them? We sell the portfolio. So we take those loans we cannot get back and we sell them. So the actual loss is even lower because.
So you said it with a big discount.
It depends because it depends on the market.
Sorry, I have to interrupt because Edward is no more in the camera because you moved back, I think.
Come closer.
Sorry, I think it's just it makes sense to mention it.
Okay.
Yeah. No.
I don't see what you see, but okay.
I will show you the.
Oh, great.
Okay.
Now it's okay again.
Yeah, okay.
But it was only the nose, and I thought maybe
maybe you should show.
I should mention that I didn't want to interrupt, but I thought I have to mention that. Yeah.
Yeah. So yes, we do sell with a discount, but for example, in Poland, the portfolio part that we cannot get back during the debt collection process is somewhere around 5 or 6% of the total, and then we sell the portfolio to debt collection companies, and they do the debt collection, and we're not involved in that anymore. And the price in Poland is somewhere around 50%. So it's 50% discount. Mm-hmm. For loans whose maturity is more than 120 days late, more than 150 days late, we still get 50% of that part of the portfolio back. Of course, price is changing, and in Spain, the price offer is not that good as in Poland, and I think the last sale was 27%. Mm-hmm. So in Poland we sell for 50%. In Spain, last sale was 27%. So.
Yeah, the problem is now I'm not so much into this business, so to understand it, the 27% or the 50% is
from the
compared to the
from the capital.
From the initial capital or including the interest?
Initial capital.
Initial capital.
Okay.
Principal
Principal
amount. Yes.
Not interest rate not included.
No.
Interest rate not included. Okay.
No. So if we talk about expected credit loss, in average 9.5% from both countries, but it's not the final loss. We sell the portfolio, so we get something back, and the final loss is even lower than that. And as you can see from both pictures, expected credit loss has slightly decreased by time. And one thing is, if we talk about Spain, we have improved in scoring a lot. We have improved in debt collection. We had added new data sources, so we could score customer better. In Poland, the influence comes from changes in legislation. As soon as they implemented interest cap, we started to get better customers. So you see that slightly it goes down, so it's improving in time. Even though those green bars, we issue more loans, but still the quality of portfolio is improving. So this is what this picture shows.
Okay, yes, very interesting. One related question, follow-up question to that. The interest rate, maybe you already mentioned it, but I forgot it. The interest rate for the customers, for the borrowers, is it the same in Poland and in Spain? Because you have this limit in Poland. We have been talking about that, this I remember, but I cannot remember that we have been talking about the Spanish interest rate for the borrowers.
Yes, you're right. In Spain, the interest of borrowers is much higher than in Poland. Also due to the fact, considering that the risk is higher in Spain than in Poland, like as Iveta showed on the screen, that the expected credit loss in Spain is higher, and that's why the market and the lenders has adapted to this factor, and the product is more expensive in the market. So we are
currently
we are charging monthly 38%. And the market average is between 38 and 35 and 38 is the market average for the product.
So
considering that in Wandoo's case we are offering first loan for free, for this repeated loan, for the second and repeated loans, it's the 38%.
I'm not sure if it's technically possible right now, but we will. We also have to mention that we will make another record maybe tomorrow where we show the whole process, which will be very exciting for me. Yes. We show the office, and we try to really get transparency and also like learning for us into this business. But is it possible to show the website of Spain maybe for the borrowers on the screen? I'm not sure if it's possible, but I think it would make sense right now, just that we can better understand what you have been talking about.
It's slow. 1 second. I'll try to.
Because I've been talking like this 0% offer and so on, but maybe we see it on the website.
So here on the screen...
I'll share it 1 second.
Now we have Indirect on the screen, which is also nice.
Which is also nice.
But we are waiting for the website.
So the main takeaway is that the interest rate, how high is the interest rate in specific market?
Now we can see it.
It does comes from the payment culture, because if we have higher rate of debtors in Spain, we cannot afford to charge the same interest rate as we do in Poland, because they pay better. So usually interest rate within the market, it does includes the level of risk of portfolio. So for that reason, as you saw, in Spain we have a worse portfolio than we do in Poland, but it is compensated by the higher interest rate. So that's the point. I don't speak Spanish.
I have some questions already to that.
Maybe click, maybe this helps.
Oh yeah, right.
We could also leave it in Spanish. It's not the point, because it's more related questions. So what was the first rate? Now I'm confused.
Interest rate? First one for free?
No, I know what I wanted to ask. Yeah. So first question: is it limited only to nationality Spanish? So people with Spanish nationality, or is it only for Spanish citizen?
No.
Or is it open to
our product Wandoo and Navinto products in Spain are available to everyone who is a Spanish Spaniard or has a Spanish residency permit, the NIE, so-called.
Ah, yeah.
So basically, we are onboarding all the customers who has either Spanish DNI or NIE.
Okay, so I could apply for a loan, but I will not do it.
In Spain,
probably,
we also have the second.
This was the second question. This was exactly the follow-up question I wanted to ask, because I already saw this one day. So you have two brands. We have for the borrowers, for the customers. They don't see the connection, and they have two. So you offer two different
We offer
brands.
two different brands. So Wandoo is our primary and the biggest product, which represents more than 90% of the volume, and Avinto is our second newest, with a better design and very nice colors. We spend a lot of time designing, and this product is more for testing different initiatives, pricing. We have tried to have Avinto product first loan with an interest. Now we have now we are testing second loan, the first loan for free. We are also testing in Avinto to have different interest rates compared to Wandoo. So Avinto is slightly cheaper than Wandoo, to see if there is any difference in the quality of the onboarded customers and etc. So
because when you want to implement the change in a loan product, for example, decrease the interest rate to see if the portfolio quality improves or vice versa. You don't test on the whole population because you will risk with the whole portfolio quality to get better or worse. So Avinto is, well, it's not only for testing purposes, but now it's mainly used for that, because if we have some idea, okay, let's cancel first loan for free and see how it influences the loan portfolio quality of it. We have a great opportunity to do that on less than 10% of the whole volume, not to influence the whole performance of the portfolio in general. So it's kind of our way how to try to find the better ways for the product, but not sacrificing the result of the whole market.
Yeah, I get it. And these two brands are the only ones you have currently running in Spain.
In Spain, yes, and also we are accessing our customer needs. So what kind of product in the future they want to see, want to use, because we are also collecting feedback, and we see that they want cheaper, they want more flexible payment schedules and etc. So we are also in a process for the future of designing something a bit maybe newer to the what is in the market.
For example, if people say they are not satisfied with Wandoo and they complain and they say we will go to the competition to Avinto, you say it's okay.
Yeah, we say it's okay.
Well, okay, it's your decision. You can take Avinto
but
as well.
it's worth mentioning, it's the same legal entity. If you check both websites, people they don't notice. Yes,
they just see
but
like
it's the same company
brand.
Also. Avinto is the same office we are sitting in now, and it's the same legal entity that for both brands. So.
Yeah, but it's interesting to see this for me as an investor, because probably I will not apply for a loan if I see this interest rate,
probably.
but I'm happy to own loans with this interest rate through Swapper. Okay, good. This was really very interesting to see and understand, and I think we will talk more about this in an extra video we'll record tomorrow, where we try to understand and learn more about the business and the whole process from the beginning until we invest in through Swapper. Okay, then we can continue to the next question. We have been talking about profitability already related to the default rate, but now let's getting really back to the reports and the numbers. I have to mention finally we can see the report of Swapper as well as the report we are talking about right now on the finance on the Swapper website. I can put the link in the description. But to start into this more figure-related topic, the last year, you mentioned already, but to make it clear, you have been profitable in Wandoo Finance Group and the entities?
I cannot tell the final number yet, because when we were closing 11 months, and that's the report also available in Swapper blog, we were closing with a profit close to 300,000 euros. But I cannot tell the number of the full year because we're closing the year at the moment. We haven't finished that process yet, and I don't want to name the number and later it will be wrong. So what we have implemented, we have this agreement with Indirect that we will be providing not only annual reports of Wandoo Finance but also quarterly reports in a format of presentation of the results, maybe some important news and events that have been happening in the company. So first one was published, I think, in November or beginning of December. December. Yes, and we will be publishing also quarterly or yearly report about 2023 within the next few weeks. As soon as we close the year, we will have the numbers and we will prepare the report for the Swapper platform as well. So the year we will close it with a profit for sure, but I cannot name the final number. I assume we will put it in a quarterly report very soon.
Okay, curious about
but
that.
You can mention that December was quite good.
Yeah, it was really good.
Okay, so it went up, yeah?
Yeah, well, we have this trend for the last almost 2 years. Each month is better than the previous month. If we look at month to month, the trend is stable, it's going upwards. So December was definitely better than bragging. So December was definitely better than November.
Okay, on my screen I opened now the announcement from on the Swapper website from the 29th of December. I guess Indrek also knows what I'm talking about. And then you have a summary of the audited report here on the website, which is meant to be, I think, easier to understand. And then you can open the PDF, which I have also on my screen right now, is the audited report. So we finally have an audited report of Wandoo Finance Group, which is, I think, important for a lot of investors. And also Alex, you've been talking about him, mentioned that several times that he is waiting for the report. So we have it finally, and I tried to go through it, but I guess most investors will not read it in detail. So I think also we have already, again, 1 hour interview. So I think what would make sense in this interview is that we are talking like in summarize about the numbers. I saw 2021 and 2022 as quite challenging for you, but you told me, but it was good at the end. So maybe you can just summarize the numbers a bit, like the profit or loss, especially also talking about the losses in the audited report and the expectations and all that. I think you are more professional to talk about that than even my question is now.
Yeah. If we talk about the history, the most challenging years was the post-COVID period, of course. And 2021 we closed with nearly 2 million losses. 2022 we closed somewhere around 800,000 euros was the number. I think it was below 1 million already. Loss, yes. And 2023 is profitable. And as I said, the trend, if we're comparing month-to-month result, it's improving for the last 2 years, and it's obviously it's going to be better. I cannot name it's very hard to tell the number of forecast of this year because we are planning to add more markets. We are planning to grow the volumes, and it also very dependent if we close the deal with institutional investor about 10 million in February or in July. So it will the scenarios how fast we can grow will be different. For what I can say for sure, the expected EBITDA and profit is at least a few times higher this year than it was in 2023, but I cannot give the specific numbers. It's very dependent on the moment when we attract the investors, investments, and very dependent on how many markets we will manage to open, because we will most likely manage to open one more European or close to Europe market this year.
Okay, so expectations are like focus on expansion plans,
of course,
but still, of course, also having in mind liquidity.
And yes, and we do think about about our capital, or I don't know the right word probably, because we did this increase in equity in the end of December, and that will be reflected also in annual report of 2023. We will publish also next year's, basically 2023 annual report, but it's probably going to be the second part of this year, because we do this consolidated and annual reports, and the term for submitting them is only in autumn, so it's going to be quite long until that. Now, one thing I can surely mention, that we will be changing auditors. Now we have quite small company that makes an audit for us for few simple reasons, because it's cheaper than Big Four, obviously.
Yes.
When you have losses, you cannot afford to pay Big Four to make an audit for you. So, but we are getting back on track. We did get back on track, and also institutional investors, and also to be able to issue bonds, we will have to switch to different auditors. So next reports will be with a different auditor probably. Yeah.
Okay, good. Then I want to proceed to the same similar question, but to Swapper platform right now. So address it to Indrek. I just opened the annual report for the year 2022 from your website. Maybe for the interview, yeah, we can just like summarize also about Swapper platform. Is Swapper platform profitable? And what is the most important messages I would summarize from the last report and the expectations?
You mean talk about 22 or 23?
I'm talking about 2022 actually, because this is the last report. Obviously, I have on the website now.
Okay.
I think so, December 2022 you published it, yeah.
Mm-hmm. So 2022 is it's like a steady growth that we had among investors, like growing, and also like the amount of loans that we offered on the platform. So that was also like a steady growth. In terms of the profitability, yes, Swapper is a profitable company, and like the net profit was more than 100,000 euros for 22, and 23 is something that it's I would say it's similar. Of course, we're still growing, so it's not the same numbers. It's bigger numbers, also bigger numbers from the amount of loans that we offered, also amount of the investors that were using Swapper. And that results also higher amount of profitability also in 23. But 22, if anyone wants, we have on website under the About page, we have a section where we have financial statements, and we have all 4 years financial statement information there. So all the information is there if any person wants to check. It's in English, translated from Estonian, so you can check these things and get more into the details that interest you more.
Yeah, I will also put the link in the description of the video, so it's easy to open it during you watch the interview. Okay, good. Then just want to check, because we already mixed the topics a lot, and so some questions don't make any sense anymore because they are already covered. Some might not be answered. We already covered also this legislative issue with regulation in Estonia, probably for the platform. Yeah, so this we also covered already. Maybe we can just summarize the last questions to Wandoo Finance as well as Swapper, but maybe let's start again with Wandoo Finance. You already covered that you are going into new markets and trying to expand, and you have the second brand in Spain and so on. But maybe we can talk a bit about the future at the end of this interview. Any new products in Spain, in Poland, in general, Wandoo Finance wants to bring on the market? Any exciting news in the industry? Something you would like to mention at the end of this interview?
Let's start with Spain.
Sniegto regulācija neko teikt. Es vienkārši.
No, you can. Why not? There's a regulation coming also, like the whole consumer
credit directive
in Europe.
And I don't know if we should talk about it because it's quite far away for Spain.
We should.
Yeah.
I'm curious.
No, but that's something that we were thinking also, because in Poland, in Spain, in all markets where we are constantly checking the market situation. We're trying to find new products that we can offer, because now we're working on the short-term loans. Those are 30-day loans, consumer loans in both markets, and we constantly are looking for different kind of products. We were thinking about few, but there's this consumer credit directive, which is supposed to come in force in a while, but still, and we don't know how it will change
what we can or cannot do.
Yeah, because for example, if we talk about Poland, I don't think they will have, because each country in Europe, they will have the possibility to adjust or adapt the legislation for each country. If we talk about Poland, for example, it's quite more or less understandable that probably this directive will not change anything, because all the changes have been done in Poland recently, and probably they're not going to change it every year. Spain, it's a bit different story, because there's no limitation, no interest cap, no specific regulation so far in Spain. So most likely this directive will influence something, and that's the reason why when we talk about the Spain, we don't think about more products until we know the rules of the game. If we implement the new product, it usually takes time for it to start to be profitable, to be interesting for the customers. You have to spend some time on marketing and money, of course, on marketing. So this is something that we actually don't want to do in Spain until the moment when we know the rules of the game. If we talk about Wandoo Finance, did I said what you meant to? Yes. So we don't know the regulation, when it's going to come into force in Spain, and will it influence anything. So that's an open question. If we talk about Wandoo Finance, in general, we do have short-term loans in Poland and Spain. We don't have any other products, and I don't think. We were considering to have also credit cards in Poland specifically, but we didn't find the market, or didn't find the customers who might be interested. So that project was postponed. We actually also gathered the payment license, payment institution license in Poland. One of our companies has this license, but we decided not to launch the product, so we're not using that license. We still have it, but we haven't launched the product. If we talk about Romania, for example, in Romania, short-term loan is not a way to go. So in Romania, we have a credit line, and it has term 2 years. So it's the long-term product. It's not a short-term loan as it is in Poland and Spain. And yes, we are looking at a different kind of products, but it really much depends. And if we talk specifically about Spain, then probably not in the nearest future. We need to wait the rules of the game when we know the specific requirements and how the regulation or legislative environment will change here.
And I am actively participating in that process, because I am also a board member of the Spanish Microloan Association. So together with other lenders, we are following the news. We have a company. We are meeting with the ministries to speak about possible regulation and what it could be. And now we are working on suggestions on how association would see fit the association, or what's the association's view on the regulation. because it's now in September the European directive, European Parliament has voted for the implementation of CCD2, and it will be minimum 2 years plus 1, so 3 years till something tangible will actually happen in terms of regulation in Spain, and we want to use this period actively to, from association point of view, to come up with what we as association see would be a perfect regulation for Spanish market. And I think we are in a good position because we know how other markets got regulated in Europe, what regulations were put, because there is not one, there's not an, how to say, same regulation in all the countries. There is different.
Yeah, but it's guessing game now. I mean, it's like really a guessing game.
It's a guessing. We will never know what will be the final, but what we can do is to say that, you know, looking from the other countries, the examples, this is what association would see is the best, or what's the association's view on regulation in Spain. So this is the work done.
Okay, so I already got some follow-up questions in my mind. As always, I guess you expected it, but I have to use this opportunity today because this will not be so often. So first question, somehow related to that is, but it occurred in my mind is, you have been talking in Spain about the offer with a free loan for if they apply as a new customer. Yeah.
Yes.
So first question on that is, do you earn anything with these customers? I mean, I'm a bit scared from investors' perspective that you lend money, pay us 16.5%, but you don't get any interest.
Yes.
How is it possible to be sustainable for you as owner and for us as investors who are back financing that and
the main priority is the customer loyalty. So giving every free loan, we expect that big number of these customers who try our product, they will become a returning customer and take a second, third, fourth loan. And as you know, we have a shorter product. So it's not free for 1 year; it's free for 1 month maximum, and then it's the time to repay the loan or extend it, or repay and take the second one. So. When looking on the new loans or the first loans, which are for free, we have to consider that there are customers who then repay and disappear and never come back. So we call them free riders. They have tested. We haven't earned, we haven't made any money on them.
Not even a service fee or anything. Nothing.
They came, they tried, they left. Because we are in competitive market. So if we will start charging some fees, it will be even worse. So then we have new customers who come, they try, and they use the extension option. So they are extending the payment term on their first loan. So this is a revenue we create when they are extending the payment term also on the new loans without even repaying and taking the second loan.
What will be the interest rate for the second month? So they have 1 month for free, if I understood it.
Yes.
Yeah? So then they extend for 4 more weeks.
Yes, so the 25% of the extension fee would be applying for the second 30 days of using the money they have borrowed.
So it's 25 for extension. But if customer takes first loan for free, then he repays it, and he takes the next loan, it's 38.
So it's cheaper for him to stick to the initial loan,
but he's not getting the money. Meaning that usually the first loan that we give both in Poland and Spain, the starting limit is very low. We don't give 1,000 euros when customer comes for the first time to us. We give a very small amount, and with each next loan we increase the loan amount or credit limit, if you so he takes 100 euros, yes, for free, but next time when he comes he can take a higher loan. So from one hand he has the possibility to extend for 25% interest rate.
And if he extends, he can do it once or twice, or
he can extend till 8 months. So he can be 8 months extending the product, and some of them do, of course. And but yes, as Iveta mentioned, this is like the first filter. So the free riders, they come, they try, and of course in Spain expected credit losses are higher. So the first loan, it's also a bit of filtering the ones who will not pay and become a bad debtor. So then when
so you also can test them kind of if they repay or
not giving too big of amount of money with with lower amounts, we're testing their quality, and then when they prove it's becoming a good customer, they pay on time, then their credit limit goes up, and then starting with maybe 200, they end up having a credit limit of 1,000 euros, and that's the offer.
And if they extend the loan what was the for the second loan they pay 35 or
38.
38% per month.
Yes.
Yeah.
Oh my God. Okay, that's good. Yeah, that's good. Maybe I should ask you also if I can become shareholder. But anyway, okay, good. This makes sense right now. Yeah. And and if they extend this loan, it will be 38 for the next 4 weeks as well, or?
No. If the extension would be then, of course.
Extension is basically you pay 25% of loan principal amount to extend the term. You don't repay loan, you pay the fee, and your repayment term from this month becomes after 30 days. So you can pay this fee 8 times extended. So you took the first loan of 100 and you repay it only after 8 months, but every month you have to pay 25% every month.
Like an interest rate.
So it's also okay
like
for us.
Rate,
yes, it's also okay for us if they pay that or they take the next loan. So
still, because you pay me 16%, so you still have a nice gap. So talking about the interest rate for the borrowers, it is 38% in general for the second time they lend the money. It's 25% only this fee the first time. But for me to totally understand it. If they have a loan like for 38% for 4 weeks, they extend it, they pay again 38 for the next month, plus 25 for the... No, then I'm wrong.
No. For example, you're taking a loan for 1 month, but you realize that your salary is coming 7 days late, and you will be able to pay this loan 7 days later than your original term. So then in our product you have an option to choose prolongation of your payment due date. So you say, okay, I will pay 7 days later, and we have an option, you can select 7 days, and you will pay a fee for that you will be changing your due date. That's a fee for changing the due date for your repayment, because if you don't do it and you pay 7 days later, then penalties for the debt collection service will start to accumulate, and to avoid it, you choose an option. Okay, I will basically extend it, the due date for my loan, and I will avoid to go into, let's say, debt collection discussions about why I'm late on my payment. So this is typically for customers to avoid entering any kind of debt collection communications or calls about why have you not done payment on time. And then of course customers can select whatever they want, 7 days extension, 14 days extension, 20 days extension, or 30 days extension option. This is typically, I think, if our client has taken a loan and salary date is further from the payment, and then you need to adapt to the...
Or I have my repayment term, but I don't want to pay. I decide to pay extension fee, but spend money in the restaurant. That's not necessarily
the extension fee they have to pay immediately.
Yes. You cannot say that I will pay extension fee later, please extend the term. No, we extend the term.
25%?
Yes.
For 30 days.
For 30 days.
Yeah.
Yeah.
And the interest rate is still continued on the extension?
No, it doesn't apply. It's the interest rate is for the original loan term.
4 weeks. So it will be cheaper for them
to extend.
To extend?
Yes.
So they get a benefit if they don't pay back in some way. Because they can extend 4 weeks for 25%, but they have to pay 36% if they apply for a new loan.
Yes, but if the client...
So 8%, sorry.
Yeah, but if the client is on top of
it's
the...
not really a benefit.
No, but imagine if on one customer level you would see a customer who takes a loan for 1 month, and at the end extends and repays your interest plus extension fee, then the total revenue from this customer is higher than from the customer who will just pay you on time and will never come back. So
extension, well, in general, not in general, extension is the big part of our revenue stream. So we don't mind them to extend because if customer takes, let's say, 100 euros loan, it's the first loan, and then he extends by paying 25% interest each month, and he does that 8 times. So he have paid us 8 times 25% from the principal amount. We don't mind that because you froze this money for 8 months, of course, but each month you are getting 25% interest per month. So in average it's 250% per year.
I was just calculating that, okay.
Yes, 250.
This was exactly what I was thinking about.
But from the other hand, if you look at from the borrower's perspective, if he is using such a product, he's usually interested to get higher limit. Because in the beginning, when you come to any loan company, your credit limit is very low. So if you have the money to repay, you usually will repay, and if you need it again, you can take the next loan and it's going to be the higher amount available to you. So usually they extending when they don't have the ability to pay, so they just extend, or they just don't need more money, they just don't want to pay and they just use it as an option.
Well, it's still a huge leverage if I compare that you pay 16% plus and like 300% almost average, I don't know, interest you ask for the loans in total per year. So we are talking about like 300% interest for the borrowers and like 16.5 you pay us. 16% you pay us, yeah?
Of course, but...
So you could pay us more, huh? Like maybe you can negotiate something.
Yeah, but you have
I would be okay with 100 and 200 is for you.
Yeah, but if you look at the year statements, we are not making millions in profit. And we do have this interest higher in Spain, not because we want to, but because we usually calculate the interest rate depending on the payment culture, and if in Spain it's worse than in Poland, it's reasonable to have higher interest here because we need to cover that part who's not paying back on time. So we have to have something to cover those who just are too relaxed.
And it's important that there is a spread and it's sustainable, because if it's not sustainable, it doesn't help anybody of us at this table, including Indrek at other level in Tallinn. Good, okay, then maybe a follow-up question. Do customers, do the clients try to misuse this first-time 0% offer, like using another family member to apply as a new client, friends, whatever? You experienced something like that?
Yes, there is always people who want somehow to cheat the system or somehow try to, but nowadays there is so many tools.
But no, I mean, I think Bernhard is not talking about
maybe
identifying.
No, I mean, like a family. Yeah, you have a family. First, he is applying for a loan, then the wife is applying for a loan, then the brother, then the.
You don't even have to do that. I mean, there's a lot of lending companies here in Spain, and it's usual market practice to offer first loan for free.
Okay.
So all you need to do, you take loan here, you take another company next month, and you go from one company to another, and you have 20 loans for free just by moving from one company to another.
But at the end it's not for free because they will extend it then.
Yes.
And you have the data. You have the data, so you can try to promote in future.
Okay.
Yeah. Okay. And how many borrowers do return from this offer? So if they take the first one and for free, and how many come back to take another loan?
I mean, we measure our retention rate with various different old and new reports. So every report shows something different. But now we have, in general, I would say the retention rate it's quite high for us. We have between 70 to 80% of customers who are being retained. Returning either keeping on extension or taking repeated loans. So it's actually quite high.
It's very high. And why we are laughing about reports, because we have new sales person in Riga office. He's responsible for the sales in the whole group. We didn't have that position lately, and when he came like a few months ago. He started to collect all the kind of reports, and now we have so many reports of retention that in general rate is around 75% of them returns, but we also are checking that from very different angles.
Yeah.
So how many of them are extension customers? They are like extending, and that's kind of different story. And who are coming back to take a loan and blah blah blah. So we are like drowning in reports lately since we have a new position in.
I see. And then I have a completely different topic question to Wandoo Finance. What is the concrete license, or what licenses do you have in Spain as a lending company? I mean, how do you call it? Is it non-banking lending company? I don't know, even the license and the name, maybe you can explain that.
So Spain, according the law, micro lending sector is not being regulated. So there is no license needed, and our companies from our sector does not have to report to Bank of Spain.
No regulation at all.
At this moment. There are some supervisory bodies that, despite we are not being regulated by Bank of Spain, we have to comply with IML regulations and anti-terrorist financiation and have different procedures implemented in our companies. This is regulated by the Spanish CEPLAC, it's an entity, and this is what we follow. So we have IML audits done, internal procedures, but regarding the financial activity, no, Spanish market is not regulated, and the CCD2 will be coming in place in 3 years.
That's
so
consumer directive.
Consumer credit directive, yes.
And that's after 3 years. That's going to be the first probably change in the Spanish market. Whether it's going to be licensing or interest cap, we don't know. That's just a guessing game. But in 3 years, we could expect something.
But this comes like on the level of the European Union. So
each country has to adapt anyway.
Yes.
So
it has to be adapted to all countries in the European Union.
Yes.
But you feel pretty sure that you will be able to continue profitable also with this.
We don't mind the regulation in general. I mean, Poland is a great example. We are regulated in Poland. Our regulator is KNF, basically Financial Commission, or I don't know how to correctly say it. Before that, it was Consumer Protection Agency. Now it's Financial Commission of Poland. In Poland, you have to have the permission to start lending activities.
Actually, it would be the follow-up question: what license do you have in Poland?
Yes. First of all, many years ago, you couldn't just start lending businesses as it is in Spain. You had to register a company as a lending company and receive a permission to start such a type of activities. So we done that in 2016 when the company was founded. And now, with each year, you are regulated more and more. And in general, we don't mind to be regulated as long as the regulation does not kill your business. Meaning that sometimes regulation brings a lot of costs on us, and then it might not be profitable anymore. So we don't mind the clear rule of the game. Like we don't mind the regulation as it is, like per se. And in Poland, yes, now during the last years, regulations are becoming more and more strict. And I think the last interest cap that was introduced in 2022, December, and now changes in legislation again in December 2023. We have regulator, we have to report to the regulator different kind of things. They're requesting random things. Well, it depends, and the same as all the markets we have are European markets. We do comply with AML, KYC policies, GDPR, of course, and probably the last market, Romania. There we have a license from Central Bank of Romania. It's very licensed, if you can say like that.
Very regulated.
Very regulated.
I would not have expected that.
Yes, it's kind of. It was very complicated process to get the license. When we got the license a year ago, it's very complicated process to get all the connections to credit bureaus, so we can check the credit history of the customer. So it's very, very regulated in Romania. So in general, we don't mind the regulation as is. As long as it's reasonable for us to be able to work.
So you're not worried about the future?
No.
Maybe to summarize it at the end of the interview like that, from the Wandoo finance perspective, company perspective, how do you see the future for the company? Maybe in one sentence last. To finish
well,
with that, and then I have the final questions.
We have quite ambitious plans, but if we talk about the current holding that we have at the moment, I think regulation does not scare us. We are used to adapt to that. We have the regulatory changes all the time in Poland, in Spain, in wherever. It's like ongoing process, and you just adapt to that. So don't see much risks in that, at least not in the nearest few years, for sure. And and we want to have more European or close to European countries within the same holding. So we see growth.
Wandoo Finance Group one day on the crowdfunding platform for equity?
I cannot promise that. Well, I mean, we do offer equity deals at this moment, at least, only to those minor equity investors that we had from the past. And since one of them was willing to invest more, we did this deal in December, but we not attracting money in Wandoo Holding now as an equity. I cannot say that we not going to be considered that as an option ever, never say never. But we do have equity deals for more riskier markets, and I believe that's something that would not be interested for a swapper investor.
Wandoo Finance Group one day IPO and stock joint company?
Maybe. You never know.
Never say never, huh?
Yeah. Well, we learned a lot of lessons, I think, a lot, and we have quite extensive experience if we look at the past. And I think we are more than ever ready to grow, and we have gained so many knowledge from all those lessons. So you never know. Never say never.
And Intrek and Swapper, I would be interested also about how do you see the near future? Is anything specific in the pipeline on new products or something like that? For example, Mintos offering ETF investments and something like that. So is there anything in the pipeline we could expect? Any news?
Not ETFs, but there are plans to go to a bit of new markets because now we have this daughter company which gives us more flexibility on some markets where the claim business model is a bit it works in a different way. So that's the idea. But I think for the 2024, the main goal is to grow the amount of loans that we are or claims that we are offering on our platform, so investors would be more happy. But at the same time, we want to keep the kind of the risk profile or the way how we treat our customers or investors on the same or even better level, meaning that the payments are on time, full amounts as we have agreed, but at the same time would like to offer new places to put their money or earn passive income. But I don't have any exact dates shout out, like, okay, that's when we have a new loan originate or that's when we have a new product. But this work is something that we're doing in the background all the time. But I also must point out that the Polish regulation change that took a lot of effort. So some things are kind of on hold, and some adjustments are still we're still doing in order to be more transparent with the structure that we have at the moment, and also what kind of information we are displaying on our website and selling to our customers as well. I would say these are the keywords that I'm focusing on 24 this year.
Great. Then maybe final round in this panel discussion, which was at least for me very, very exciting. So thank you already now for that. Maybe everybody of you, just a last sentence, what you would like to address to the investors that will be watching this record. Maybe we start with Iveta.
Me again. Well, I think the main focus for us, no matter what happens, we have always done everything to keep the promises, and I think we did well with that. And we have intention to keep on going in the same manner, even though we grow. We don't want to put too much risk on the current group, so that's the top priority for us. We keep the promises, and we intend to stay in the same position in future. So yes, we will be growing for sure, having more products, offering hopefully more markets soon, but with intention to keep our promises as we always have. So.
Thank you. Edwards, anything you would like to communicate to the investors that back finance the loans you offer here?
Yes,
you offer here in
Spanish.
this office in Spain
Spanish,
to the investors in the background?
First, I want to say that it's an absolute honor to work alongside Iveta and to be in this Wandoo journey and to watch how Iveta and the management is putting the building blocks together and building the empire. And I'm a little bit excited to wait what will be the next building blocks in 2024, because somehow always Iveta and the team finds the very right building block to put on the top of what we already have. So the next building blocks will be fun to see, because we are finally on a profitable path. And I'm very proud of that. Spain also made a profit last year, and my personal goal for this year is to grow volume, maintaining the liquidity, so that we could grow, become bigger, and maintain the profit levels we have achieved. But I'm more excited about what will be coming on top, because there is new investors, the bigger investors, the bigger projects, and this is when the fun part starts. And I think also for investors to see what there is, what else is coming. So I'm excited.
Okay, great, thank you very much. And Indrek, anything you would like to communicate, address to the investors, like at the end, the customers of your platform?
Yes, for investors, I'm actually very grateful for all the investors who trust us to use their funds and then earn a passive income in return. Also point out that please, if you're like very concerned or would like to know more, then check out our Swapper blog. There's a lot of information, and also all the highlights and all the information we are showing on the blog there. So make sure that when you have an account that you are receiving the marketing emails. That gives you information. Also, as I said, the annual reports are on the website. And we also are using like some social channels, and also when you have any questions or anything, just like reach out to us, to our support. We will try to answer you as much as or as thoroughly as we can. And but yeah, more like to wrap it up, I'm happy that investors like us, that they are using Swapper along with probably other platforms that they're using their funds, and keep on doing that.
Okay, great. Thank you very much. Now I have to use the phone. Why? Because just this moment the memory card was completely full, so it turned off completely independently the screen with Indrek, and then it turned off the camera in this moment. Yeah. But anyway, we are always focusing on the solution, so I will just edit it and then put the ending of this interview with my iPhone. Thank you to everyone. Now looking forward to exchange in the comments. I know it was really a very, very, very long interview, but I hope at least for some of you it is also as interesting and exciting as it was for me. And so, thank you and goodbye from Madrid.